Mark To, the head of research at Fung Financial Group, joins us. He specializes in commodities. Mark, how do we trade gold? What's the range that you have in mind for gold over the next 24, 48 hours?
For the next 24 to 48 hours, I think the immediate range could be with a 95% likelihood, I think, within the range 1250 to 1315. That's they have already incorporated a lot of different versions of betting those results from the bookmakers as well as from the asset prices. I think for the those who've been bullish on gold, the gold bugs, they have been very careful not to add on their current positions because they know that people are still very priced in, and that's why they are going to wait and see. For most of the people are going to jump on the bandwagon unless the situation changes a lot. So at this moment, I keep my forecast that in Q2, the most reasonable range is 13 to 1400. With the uncertainties with the Brexit, I still think that that could be valid. And for the immediate future, within the 24 to 48 hours, the most likelihood, the support level will be 1250. I think most of the people may close the positions where they goes long or go short of the position.
Okay, well, the pound sterling is trading at nearly the highest level in 2016. Is this all sentiment? It's not fundamentals, you think?
Well, if you look at the pound sterling's movements for the last 3 weeks, I think what concerns us most is the volatility in terms of the implied volatility for the calls and puts, the options. We can see that it has eased out a little bit for the past 2 days, but for yesterday, it comes out a little bit higher than before. So overall speaking, people are still going to wait and see. But I think that those people who are going to bet on going up or going down, they're still going to close some of the positions when the results get announced. So the overall impact will be cancelled out with each other. I think the volatility for the pound sterling will be a little bit calmer than the market had been expected. So somehow the episodes in the past 2 weeks actually have I think have been doing something that have been experienced it or expected for after the results, and somehow I think most of the events have been priced in already.
All right. Thanks a lot for joining us, Mark To. Also joining us now is actually Jeff Chowdhry of LGM Investments. Jeff, always good to have you with us. Well, what's the gut telling you as you're getting into this event and well underway? Does it look even, Stephen, or you're also in the Remain camp?
Yes, I think it looks like it's a Remain. You're right that the polls seem to be indicating a very tight race. But I think what is more important is the betting markets, where people actually are putting real money rather than actually telling people what they're going to vote. And the betting markets have moved very, very firmly in favor of Remain, and by almost over 70%. So it looks as though the wave of money is moving towards Remain with 24 hours to go, or less than 24 hours to go.
Jeff, for a moment, let's just assume that, you know, the bettors once in a blue moon could get it wrong. And more than the bettors, because they're still even, Stephen, let's just assume that the market is getting it wrong because it's overwhelmingly on the Bremain side. So if we get a leave vote, then do you think the world is staring at a deep gash on the British pound? Would it even lead to volatility and more weakness, perhaps, for the euro? What happens at 8 a.m. GMT tomorrow?
Yes, I mean, I think in simple terms, I think what will take a hit would be the currency, the pound. That would go down, 5 to 10% easily. The stock market, similar sort of magnitude. The UK stock market, Europe, yes, because I think it will cause not only problems as far as UK's membership, but also cause a chain reaction in terms of what other countries may do. And I mean, I was reading something last week which said, that if they had a vote in Germany today, the majority would want to leave as well. So, I think it would cause a sort of a ripple effect across both European stock markets and the European currency, and people will naturally move into the yen or gold or the US dollar.
But what is the scope of this ripple effect? Even faraway emerging markets like India will get impacted by risk aversion?
I think in the short term, and I mean short term, sort of just a couple of days, I think yes, because it would definitely be a surprise, one. Secondly, it would mean risk off. And I think in a risk off environment, emerging markets, including India, would be affected, would be effectively on sort of a short term basis.
Okay, so Jeff, let's now reverse that question and come to the possibility that we do get a Remain vote, which is what the market's base case scenario is. Then do you think we'll get an even bigger jump in risk assets despite this huge rally? Would you see a big boost to the euro and to the pounds? How do you really see the knee-jerk reaction play out?
Huge is probably a bit too much to say. I think there will be a relief rally. Again, not of the same magnitude as if it was a leave vote. So I think, again, sterling, the UK stock market, the European stock markets, and the euro would probably rally a bit. Maybe of the order of sort of 2 to 5%. But I don't think of the same order. I think also the markets which haven't focused on what the magnitude of the Remain vote is. I mean, if it's very, very tight, let's say it's 52-48, there may be some question marks about David Cameron and his leadership of the government. Obviously, if there's a big Remain vote, let's say it's 60-40, then I think that would be less of an issue. But so we also not just have to look at the level of a Remain vote, if it is Remain, but also what the magnitude of the win is as well.
All right, Jeff, appreciate you joining us on the show today. Thanks so much.